What's good, future millionaires? We back with another banger. I'm DecemberDeMarco, Fortune 500 marketer, here to share my insights to the market with y'all to hopefully help y'all become better informed investors. Salute to y'all for pulling up on the channel. Make sure you hit that thumbs up like button for the YouTube algorithm and do not forget to subscribe. So we are back with another market update on Shiba Inu. Things appear to be very quiet right now, which leads me to speculate, the release of Shibarium coming soon. Now, someone asked me in my last live stream to give a Shibarium release prediction, and I assumed before the end of 2022. Now, this is not, I don't got a crystal ball here, so it's not financial advice, but that's just what I'm expecting. The team told us at the end of the third quarter, that was September 30th, so now we're into that fourth quarter. Now, I figured it would be done by the end of October at first. That didn't happen, so, clearly I don't know when it's going to be released, but my speculation is that, they told us it was already being wrapped up, close to being finished, so hopefully we get that before the end of the year. Now, could this be a massive catalyst for Shiba Inu? Yes, it absolutely can, but you have to remember that we still have a lot of outlying factors weighing down on us in the markets. Look what just happened with FTX and SBF, ridiculous things going on with these centralized exchanges. This is why I've been recommending y'all to get cold wallets, so that way you can own your own crypto. That way, just in case any of these exchanges decide to do something, shiesty or, got bad actors inside of the companies, you will not be affected. Of course, we may be affected if they crashed, the overall prices of some of our favorite coins or the market in general, but at least you will know that you still own your own crypto. So we got an important article here to talk about on how Shiba Inu is affected by FTX. So here we go. Shout out to Watcher Guru for dropping this one. The title is Shiba Inu, FTX hacker swaps 400 billion shib for Ethereum, y'all. So let's take a closer look at this. The FTX situation keeps getting worse. According to PeckShield, an address labeled FTX accounts drainer swapped 400 billion Shiba Inu tokens worth 3.9 million for 2,346 ETH. The Ethereum is valued at 2.9 million, meaning that the address incurred a loss of about $1 million. So this person trying to, liquidate quickly, brought prices down. People can see someone trying to sell fast, and the market makers will make the price even lower. Now, it's very interesting when we talk about FTX and what they've been doing. It really, it gets me worried in a sense for investors that are new to the space that don't understand DeFi, because if you're just counting on centralized exchanges, your money is literally in the balance of, what they decide to do. So, we want to start peeling back those layers of DeFi a little bit more just to get y'all more familiar. So that way, in case anything like this happens, you will not be as affected. But let's see. So PeckShield Alert tweeted and said, the address OX59AB ending in 32B labeled as FTX accounts drainer has swapped 400 billion SHIB, 3.39 million to 2,346 ETH, or 2.96 million. And it's crazy when you think about who is really behind this. Somebody's really out there doing this. They know what's going on with FTX. They know that these are investors on the platform's funds, and yet they still decided to do this. This is, an example of the greed that's in the space. Now, a lot of people, are indifferent about when it comes time for regulation, but things like this, make it pretty hard to say we don't need regulation. Let me know, how do y'all feel about regulation in the comment section? With regulation coming, we get some type of framework to operate by. We get some type of, something set in stone that, if these CEOs, executives, whatever, if they violate this framework, they'll be held liable. Right now, it's pretty much, unless they do something, completely out of order, money laundering or securities laws violation, things like that, they really don't see, any backlash or trouble for, some of these scams that are, at the end of them are obviously blatant scams. FTX was using customers' funds to borrow to another one of its companies and allowing that company to basically do whatever it wanted with it, pay for sponsorships, do, risky investments and things like that. And at the end of the day, all they were doing was reporting a certain balance on your screen. So let's say if you're using your phone, you use the app, that number you see on the screen is just a fake number. Yes, that is how much you should have in your account, but the money behind it wasn't there. They were just, hoping that everyone didn't request their money at the same time, and they would be able to, when this person requests a withdrawal of this amount, they could send it to him. When this person requests this much, they could send it to her, and that's what they were doing basically, just, shifting money around, but making sure they're funneling a lot of the money to, one of their other companies. And a lot of those investments went bad. And this is what caused the insolvency issue. Now, another thing, what was very, very shiesty is the fact that not only were they using customers' funds, but they were also stop loss hunting their own customers. So they're seeing, everyone who's using this exchange, FTX, they're seeing where their customers have their stop losses set at. They see where they have buy orders set at, sell orders set at, and what they would do is target those different levels to basically take money from the investors on the platform. If that is not shiesty, I don't know what else is. Like, it was something similar happening with Robinhood a few years back, where they were selling the customers' orders to, institutions, and allowing the institutions to trade against it. But now we see, instead of them selling the information to someone else, another institution, they're using it themselves and hunting our own, the users of the platform stop losses. And that is just absolutely wrong, if you ask me. But let me know, how do y'all feel about regulation? Do you think, we should, get that framework in place where, everyone has a certain, we all know the script to abide by when it comes to cryptocurrency? Or do you prefer to just be kind of a free for all, wild, wild west type of space where, it's all at your own risk, because at the end of the day, any of these investments, any money that anybody has lost, it was all on their own risk. Nobody, can make you invest into cryptocurrency. You should always do your own due diligence. So you shouldn't be investing behind just someone saying, go buy this, or, go use this exchange. This is one of the reasons why, I always say it's not financial advice. And I also try not to recommend these exchanges, because I understand the centralized exchanges, you don't own that, and they can get, really, really grimy, and we won't know it until it's too late. So hopefully, I did give the warning for y'all to, not financial advice warning, but, that it might be good to get your crypto off of FTX. A few of my subscribers reached out and said that they actually were able to do that. Some said they're waiting right now for like that withdrawal process. Like they said, it'll be a couple days. So hopefully y'all get to make it out. The ones that didn't, I'm sorry that happened to y'all, but this is why it's very important to own your own crypto. Use cold storage, a ledger wallet, a Trezor wallet, whichever one you want to use. It's up to you, but do your own due diligence. And we got to be careful, with these wallets, because we don't know what we don't know about them. We do know that if you control the keys, then you own the crypto. But at the same time, I have seen DeFi wallets like MetaMask and whatnot block certain wallet addresses. So that was something that was new to me as well, because I didn't know that you could do that. I thought it was completely unrestricted, on the blockchain, whatever gets transferred. But yes, they can decide certain wallets. If they, let's say if this wallet was a part of some stolen funds or something, MetaMask can basically shut that wallet off or prevent it from, doing withdrawals or transactions. So that's kind of crazy if you ask me. I mean, I get it, but at the same time, it's like, well, then how much control do, how decentralized is it? That's the question. But back to the article. According to Etherscan, the 400 billion Shiba Inu tokens were swapped on the COW protocol on November 12th, a few hours after the FTX hack. The hack resulted in about 593 billion Shiba Inu tokens, valued at more than 5.7 million being taken. However, a total of nearly 600 million was stolen in the attack. The attacker is yet to be identified. So another interesting question I seen, someone asked, are these tokens essentially removed from, basically burned token or dead tokens, because, if they can't move them, then they basically just become, in limbo, basically. And in a way that is true, but at the same time, it doesn't really hold like that, because at the end of the day, they still can be moved. They are in the circulating supply. When you send certain tokens to a dead wallet, those tokens cannot be moved. These tokens eventually, when somebody gets control of it, whether it be, if it's SEC, FBI, Department of Justice, whoever, gets, takes this over, somebody will have access to those coins. So to me, they're essentially not taken out of supply, not truly. But, this is a large amount of money. So right after they went bankrupt, they announced to all their, first they said nothing was to, nobody had to worry about anything. Then they said, okay, we are seeing some issues. They still allow people to do withdrawals, but, some people's withdrawals were going a little slower than others. Then we seen them say, okay, we're freezing withdrawals. Then after they froze withdrawals, I said, this was before they froze withdrawals. I called it out. I said, if they get to the point where they freeze withdrawals, they're going bankrupt. So, you might want to hop off of there. And that's exactly what they did. They froze withdrawals, end up making that call for bankruptcy, and then right after they made the call for bankruptcy, they end up getting hacked. Now, this sounds like an inside job to me, or unless some hacker was, now, you know, allegedly, this is not, you know, financial advice or me saying that someone did, but it just sounds mighty fishy. As soon as they announced that they're going bankrupt, magically, the customers' funds that were left in the platform, the little funds that they did have left, magically get, you know, hacked all of a sudden. It's like, who else would have the access, the ability, the knowledge, you know, and, you know, the readiness to just pull that off that fast. So, you know, that's my thought on that. But the hack resulted in about 593 billion Shiba Inu tokens valued at more than 5.7 million being taken. However, a total of nearly 600 million was stolen in the attack. The attacker is yet to be identified. So, crazy. You know, it's crazy to think about that. Let's take a look at the price right now of Shiba Inu. So, you know, how does this affect Shiba Inu? You know, we can be expected to see, if this person is able to sell these tokens, we're going to see, you know, a few $1 million worth of selling pressure, which actually that did take place already, because he did convert it into Ethereum already. So that's how it affects SHIB, you know. So even we see, you know, the army getting stronger. We're seeing, you know, more of our foundation getting stronger. We still have outside catalysts that we cannot, you know, affect, that we cannot, you know, change, like FTX crashing. You know, we seen what happened with Voyager. We seen what happened with the with BlockFi, with you know, Celsius, with Three Arrows Capital. You know, all these different crypto companies going bankrupt basically are really putting a bad name on the space right now, and it's pulling the market down as well. We could see here in June when that first crash really started to happen. But right before, right after May, like mid-May, and it dropped all the way to the lowest levels around June 20th, mid-June. Started to find some support here back into August. We get, I mean, look at, you know, UST, Terra Luna Classic. Look at all these, you know, different collapses that, you know, affect the market overall. And this is where we are right now with the FTX scandal going on. So we know that the market does eventually turn around. Look at each time when it went to its lowest point, it always came back up. Even when it drops low, it eventually comes back up. So right now, if you're a wise investor, you should be taking advantage of the prices that we're seeing now, especially with Shiba Inu back under that 1,000 level. We gained another 0. So we were just at the 12 levels, 15 levels a few days ago. So imagine you getting a second chance to scoop it up on a dip right here. This is what smart money does. They buy low, they sell it high. They buy low, they sell it high. They buy low, they sell it high. Now, of course, you can have a bag for long-term investing, but we know in a bear market, day traders or short-term traders generally make more money. So keep that in mind. That's all we got for this video. Check the links in the description section. Appreciate y'all for pulling up. We are